Beyond the world of salaries, taxes, and public markets, there exists a second economy, a hidden financial system operating in the shadows, built by and for the ultra-wealthy. It's a parallel world of offshore accounts, shell corporations, and anonymous trusts, a global network designed not to create new value, but to shield existing fortunes from the laws, taxes, and moral obligations that bind the rest of society. This is not a conspiracy theory. It is the architecture of modern power, a system that quietly funnels wealth upwards while remaining almost invisible to the public it affects. Before we pull back this curtain, let's make this interactive. If you're watching right now, tell me what you think is the biggest flaw in our current economic system. I wanted to see how this topic resonates with you. And while you're at it, drop a quick, like if you believe in exposing these hidden structures. It helps our channel immensely and allows us to continue this work. Now, let's begin. The shadow economy. On the surface, it seems like a series of loopholes. But the scale is what makes it a world unto itself. We're talking about trillions of dollars, a sum so vast it could solve global crises. Yet it sits untaxed and unaccountable in a web of legal fictions. To understand this modern empire of shadows, we must first travel back in time. To the 16th century, to the dawn of the global corporation. The Dutch East India Company, or the VOC, was more than just a trading firm. It was a state within a state. Granted a royal charter, it could mint its own currency, wage wars, and negotiate treaties. It operated beyond the laws of any single nation, accountable only to its private shareholders. The VOC amassed staggering wealth by extracting resources from Asia, creating a private financial system that enriched its investors in Amsterdam, while the costs in human lives and colonial exploitation were borne by others far away. It was the first multinational entity to master the art of privatizing profit while socializing risk. Sound familiar? The VOC pioneered a crucial concept: legal abstraction. It created a corporate veil, separating the actions of the company from the liability of its owners. An investor in Amsterdam could profit from a brutal conquest in the Banda Islands without ever seeing the violence or being held responsible for it. This separation of ownership from accountability is the foundational principle of the modern shadow economy. It allows wealth to be disconnected from its origins, scrub it clean of its moral and legal baggage. The VOC wasn't just trading spices. It was trading in a new kind of power, the power of corporate anonymity. It built a template for a system where capital has no home, no loyalty, and no conscience. 4 centuries later, the same logic operates on a planetary scale, but the mechanisms are far more sophisticated. The modern shadow economy is not run by warships and colonial governors, but by elite law firms, private banks, and specialized accounting agencies. Its territories are not distant islands, but tax havens, jurisdictions like the Cayman Islands, the British Virgin Islands, or Swiss cantons. These places sell sovereignty as a product. For a fee, they offer secrecy, zero-tax regimes, and legal structures that make it impossible to trace the true owner of an asset. A Russian oligarch, a Silicon Valley billionaire, and a corrupt politician can all appear as the same anonymous entity, a numbered company, or a discretionary trust. This system is built on a series of nested legal boxes. A wealthy individual might place their assets into a trust in Jersey. That trust then owns a shell company in Panama, which in turn owns luxury real estate in London, a yacht in Monaco, and a portfolio of stocks managed in Singapore. Each layer adds complexity, making the chain of ownership almost unbreakable. For a tax authority or a law enforcement agency, trying to follow the money is like navigating a labyrinth with no exit. The goal is not just tax avoidance, but complete legal impenetrability. It ensures that wealth can be passed down through generations without scrutiny, that ill-gotten gains can be laundered into legitimate assets, and that fortunes can be shielded from divorces, lawsuits, and public anger. But what happened next revealed the true danger of this parallel system. The 2008 financial crisis was not just a failure of banks. It was a stress test of this shadow architecture. When Lehman Brothers collapsed, it exposed a vast network of off-balance sheet vehicles and unregulated derivatives that operated outside the view of regulators. These instruments, traded in the shadows, had created immense paper wealth but were backed by fragile, high-risk assets. When the market turned, the entire global economy was threatened, not by the visible market but by the invisible one. The response was telling. Governments bailed out the public-facing banks, but in doing so, they also validated the shadow system that had caused the crisis. The losses were transferred to the public taxpayer, while the architects of the system and their wealthy clients remained protected by their offshore fortresses. The crisis taught the global elite a powerful lesson. The system worked. Even at its moment of greatest failure, it had successfully protected them. In essence, the shadow economy functions as a one-way valve. Profits and assets flow into it, but risks and losses are systematically pushed out into the public sphere. It's a game where the house always wins because the rules are written by the players themselves. Lawyers from the same elite firms that design these offshore structures often rotate into government positions where they write the tax codes, creating the very loopholes their clients will later exploit. This fusion of private power and public authority is the engine that keeps the shadow economy growing. The psychological impact of this divide is profound. For those inside the system, it creates a sense of detachment from the societies they inhabit. When you don't pay taxes for public schools, hospitals, or infrastructure, your connection to the common good phrase. You begin to see the state not as a shared social contract, but as an adversary to be outsmarted. Your loyalty shifts from your country to your portfolio. This fosters a global, stateless class of super-rich whose interests are aligned only with each other, not with the citizens of any nation. They live in London, work in New York, bank in Zurich, and hold their assets in a legal dimension that exists nowhere and everywhere at once. And what about those outside the system? For the ordinary citizen, the existence of this shadow world breeds a deep and corrosive cynicism. It confirms the suspicion that the game is rigged. It fuels populist anger and erodes trust in democratic institutions, which appear powerless or complicit. When people see headlines about billionaires paying less in taxes than their secretaries, the social contract begins to break down. Why should I play by the rules when the most powerful people do not? This erosion of trust is perhaps the greatest cost of the shadow economy, far greater than the lost tax revenue. It tears at the very fabric of society. 400 years after the VOC set sail, we find ourselves in a world it helped create. A world where capital is more powerful than nations, and where the wealthy can opt out of the social contract. The tools have changed from royal charters to blockchain anonymity, but the fundamental principle remains the same: the creation of a separate reality for the powerful, shielded from consequence. The Panama Papers, the Paradise Papers, the Pandora Papers, these leaks gave us a fleeting glimpse into this hidden universe, revealing the names and the mechanisms. But they were just snapshots. The system adapted, the lawyers found new methods, and the shadows deepened. The great challenge of the 21st century is not just climate change or technological disruption. It is this growing divergence between two worlds. One world bound by laws, taxes, and shared responsibilities, and another that floats freely above them. The Dutch East India Company eventually collapsed under the weight of its own corruption and debt, its private empire absorbed by the state. But its modern successor is far more resilient. It is decentralized, digital, and deeply embedded within the global legal and financial system. As long as there is a jurisdiction willing to sell secrecy, a bank willing to look the other way, and a law firm willing to draft the paperwork, the shadow economy will endure. It is the ultimate fortress of wealth, a silent testament to a world where the rules that apply to you and me simply do not apply to them.